And good evening. This is Michael Filighera. I'm with logicalsignals.com and also tradershelpingtraders.com. And this is the Elliott wave update for the S&P 500 for Monday, July 26th, 2021. Excuse me. The market was fairly range bound today and very much on the quiet side. But over the Globex session from yesterday, the market did, or the S&P did drop down and hold that support at 43.75, as we discussed on yesterday's update, and then proceeded to produce additional rally. And that rally does seem like it did reach that next resistance zone, which I was looking for at 4,415. And it's sitting there right now. Now, it took all day to get there. It would get up close and then it would pull back. It would get up close and it would pull back. And it did that pretty much the whole day, with Tesla's earnings coming out after the close, pushing it finally up above that level and continuing to hold it above that level. Tesla was the only company that out of the major techs that came out and reported today. Initially, the stock went up pretty much right where it is now, 673, 674. So it's just going back to where it zipped up to once the original earnings were put out. And of course, now it's the conference call. And so whatever they're saying seems to be hitting home with folks. And I believe that one of the things I saw is that they're liking the fact that the Tesla has finally said that they are had put up $1 billion in earnings for the second quarter. So good for them. They continue to hold this higher level. Let's see what happens again for the balance of the Globex session today, and then for our sessions tomorrow. Now, as far as the count goes, I have now added some labeling inside this minor third wave, which has to be and has to complete 5 waves of minute degree. So I'm pretty satisfied now that I've got minute 1, 2, 3, and 4 complete. And we're in that minute 5th wave. Now, I would think minute 5 should go, I mean, it could be done right here, and then that would be the end for the minor 3rd wave. But I think we still have some, and we're likely going to get up to the more common levels, which would be 4,433-ish to 440. That's the zone that I am looking for to complete minor 3. Now, that zone actually could go all the way up to 4,460, 62, up in that area. But again, that would be holding off until after earnings come out tomorrow. So tomorrow we have Apple, we have Google, and we have Microsoft. So we have 3 very popular, very high traded stocks putting out their second quarter reports tomorrow. And so I am expecting fireworks. One way or the other, I am expecting fireworks. And so I'm starting to hear a little bit coming out about that Apple might disappoint. Apple's not, because of a chip shortage or whatever, their second quarter earnings aren't going to be as great as everybody thinks. That's all talk and flipping around on the street, and actually I would never trade off of that, but it does add. And here in the after hours, the Apple is trading higher than the close, but only by about 25 cents. So everything remains in place. We don't really have any changes to make to the count or to expectations. So I continue to look for minor wave 3 to complete up in these areas. So we have a shot all the way up to get up to 4,462. And then it's going to pull back again. But I still suspect that pullbacks will be shallow. And that's unless we blow these doors off and we start heading up towards 4,500. Then if we're getting up into these areas, I'm going to be looking for a little bit larger of a pullback in advance of Wednesday's earnings and Thursday's earnings. On Wednesday, we do have Facebook, and then we also have the Fed. So we've got the Fed meeting that's going to be complete on Wednesday, and then we get the minutes, the result of the minutes out at 2 p.m. Eastern time. And then we have the Fed chair coming to make his news conference at 2:30 Eastern time. that all usually promises some pretty big fireworks within the market as everybody reacts to what is being said, primarily because it's about interest rates and it's about the economy and it's about what the Fed is going to have to do or not do. And so a lot will be resting on that. But between that happening, so between now and that happening, I would expect that we're going to get up at least hopefully into this zone, complete this third, get the fourth going, so that by the time earnings come out, we start to go through the roof. So again, Wednesday is going to be that. Tomorrow, we've got some big earnings. So maybe those big earnings push us all the way up. We do complete the minor three. We walk into Wednesday. That kind of gets a little tumultuous, and then maybe they kind of bring it down, but it might just be a fourth wave. Not just might. That's all I really would be expecting is a fourth wave. I don't see any reason just yet to change anything. We're in an intermediate fifth wave advance to complete intermediate wave 5, and then primary wave 5, and then cycle wave 3. So we're up there. And again, staring down the barrel of a cycle wave 4, but we talked about that yesterday. I'm not going to really reiterate any of that today because we're still working our upside at the moment. So I don't have any reason to doubt that the market is going to get up there unless the market tells us differently, and then we have to wait for that to happen. So right now, I am continuing to look for upside. I do still think that now that we finished that little 4, that corrections should be shallow until this minor third is complete. And if we're into the 5, we're into that minute fifth to complete minor 3, this could subdivide in and of itself. So I can see some of the subdivisions, but I don't see how far it should go before we have to put a 5 and then look for that little bit larger. If we're into that now, if we finish this overnight by getting up here and we start to drift lower, then you're going to run Fibonacci retracements from the bottom of where minute 2 to the top. Excuse me, I'm going to run it from here, from the bottom of minor 2 to the top of where minor 3 ends up. And that's going to give us our retracements coming off. We're expecting it here. You're looking for the market to drop back into this zone. A minor 4 correction should, by all analysis, retrace back into the price territory of the fourth wave of one lesser degree, and that will be this one right here. Once 5 and that 3 are complete, this will be the next zone that we should drift back into or move back down to. So if we're up here at 15,000, excuse me, that's the NASDAQ on my mind. If we're up here at 4,433-ish to 40-ish, dropping back down to 43.71, that's 70 points. That's a pretty big drop for the S&P. Can it do it? Absolutely. We've witnessed it. We've been there. We've traded it. So all things are possible right now in terms of height and then depth. And a little bit longer term, we're just finishing the minor third. Then we have a minor fourth, and then we still have a minor fifth wave. And so I have no reason yet to believe that we won't at least get to 4,500. And that's just basically the first level for the Fibonacci extensions for intermediate wave 5, right? Now remember, the most common is way up here. I'm gonna even pull it down. 4,966, most common relationship between the fifth wave against the third wave is that it is going to move 0.618 times the length of that third wave. And that number is 4,967, as we said yesterday. Any of these also could complete it, but that is the most common. This is the second, this is the third. So we still have, these are all in reverse order, basically. But the most common is here, the second most common is there, and then the third most common is here. And we cannot rule out if this thing gets going, it runs to there. That's where wave 5 would be equal to wave 3. I am not expecting that, not right now. But I am expecting it to move at least into this zone, pull back, get ready for the following day, and then get itself up above 4,500. So downside shallow, upside, we've got our targets. That's where I'm going to leave it for right now. The next update will be Tuesday, the 27th.